Let's get started with the market pulse. And with today's market commentary, the ASX 200 falls in early trade. Materials trades higher on the back of gains in iron ore, miners and steelmakers. The markets opened lower on Tuesday morning. The benchmark ASX 200 was trading lower by 49 basis points at 7,011.20. Of the 11 sectors were trading lower today, with materials being the best performing sector by lunchtime. Shares of Bingo Industries jumped by 6.55% to their highest level since the 20th of February. Bingo shares traded higher after the waste management company agreed to an acquisition offer by Macquarie Group for 2.3 billion Australian dollars. It has signed a scheme implementation deed with Recycle and Resource Operations owned by Macquarie Infrastructure and Real Assets for the acquisition of all of the issued shares in Bingo pursuant to a scheme of arrangement. As per the plan, Bingo shareholders would have the option to receive either cash payout of 3.45 Australian dollars for every Bingo share or a mixed cash and unlisted scrip alternative. The company intends to declare a fully franked special dividend of up to 0.117 Australian dollars per Bingo share prior to the implementation of the scheme. This enables shareholders to receive additional benefits from franking credits of up to 0.05 Australian dollars per Bingo share. Moving on to some important updates on the oil front. Oil dipped on squeezed demand amid surging COVID-19 cases in India. Crude oil dipped on Monday on a drop in fuel demand amid rising coronavirus cases in the world's third biggest oil importer and consumer, India. Brent crude oil futures for July delivery tracked down 0.03% at $65.15 per barrel on the 27th of April at 10:08 this morning Australian time, whereas WTI crude oil futures for June were 1.9% up at $62.03 a barrel. And now an update on the COVID-19 front. India has registered around 5 million infection cases in April alone. The country reported a record spike in cases on the fifth consecutive day on Monday. Prices were under further stress on talk that OPEC cartel will increase production despite a fall in demand amid rising cases in India. Moving on to some market movers on Tuesday. First stock Universal Store Holdings reported strong sales growth for the sixth consecutive year. The company posted outstanding sales performance across the in-store and digital platform, with headline sales growing by 39.6%. Store sales increased by 16.1% to 104 million Australian dollars. Online sales increased by a whopping 128.3% to 14 million Australian dollars. Universal Store Holdings shares, however, remained unchanged at 7.03 Australian dollars. Moving on now, Viva Energy Group announced an operational update for their first quarter 2021 ending on the 31st of March. CEO and Managing Director Scott Wyatt highlighted that despite continued flooding and lockdowns impact on some markets, the group delivered an overall strong sales performance, and the company is making strong progress in the recovery program with delivering encouraging results. The total group sales volumes declined by 17% on the previous corresponding period for Viva Energy. Alliance sales volumes improved and they reached 61 million litres per week in March. Furthermore, despite the sharp rise in oil prices at the start of the year, the retail fuel margins remained strong. Shares of Viva Energy were trading higher by 1.098%. Next stock, 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 announced the quarterly activities report for the period ending 31st of March 2021. The revenue remained flat at 15.7 million Australian dollars, showing certain stability in the underlying markets. The company remained the biggest oral appliance company internationally, and total patients treated worldwide now exceed 615,000. For 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 on the 31st of March, the net cash position was 19.3 million Australian dollars. Operating activity improved considerably, and the company remained well placed to benefit from the market normalising over the coming quarters. March delivered exceptionally robust results, with product volume growth experienced across key regions. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 shares of the company were slightly up by 0.515%. Now let's take a look at this stock. Spectre on Tuesday announced that it had entered into a binding agreement for a loan facility worth 1.5 million Australian dollars with EPG Capital, its largest shareholder. Spectre said that the loan facility would help it to meet its capital requirements by providing it with working capital required for further growth. The company said that the loan was subject to execution of a long-form loan facility agreement with the lender, anticipated to occur in May 2021. Commenting on the development, Spectre Managing Director Gerard Dyson said that the company was pleased to partner with EGP Capital to ensure the necessary capital was in place to take the business to the point of self-funding. Shares of Spectre tumbled, though, by 2.598%. Meanwhile, Morgan Stanley said a sale of Downer EDI's open cut business in Eastern Australia is the last piece of the puzzle in Australian company's mining divestment strategy. It also stated that the unit, which generates nearly 600 million Australian dollars of revenue annually, could yield nearly $180 million to $240 million. Downer agreed to sell its tyre management business, 𝐊𝐴𝐷𝐞, to Bridgestone Corp for $79 million. Downer EDI shares dipped by 1.661%. Moving on now, financial research firm Morgan Stanley stated that the situation is not as dire for Dexus Property Group, given the pipeline of offices in Sydney's central business district and no major tenants vacating. It says Sydney office market will stop deteriorating over the next 12 months, though pace of recovery is uncertain, but close to a turning point. Dexus has exposure to Sydney CBD vacancy levels of plus 10%. Dexus Property Group shares declined by 0.846%. And finally, as per the research firm Citi NRB Holdings, financial year 2021 profit guidance is well above its estimates. Citi has lifted NRB's price target to 6.40 Australian dollars per share from 6.30 Australian dollars per share. On Monday, the private health insurer said it expects financial year 2021 underlying operating profit to be in the range of 200 million and 225 million Australian dollars. That's above Citi's forecast of 183 million. Citi stated COVID-19 provision releases, benign claims and further risk equalisation benefits are main causes for the better outcome. The brokerage shares the NIB's top-line growth is also looking healthier than previously expected as customers hold on to health insurance in a pandemic. NRB Holdings shares remained flat at 5.940 Australian dollar apiece. All right, then, that's all for now. Stay tuned with Kalkine TV for more live market updates. We'll be back with more news on markets, economy and diverse themes and sectors.